Doom and gloom in the property market. What is a property bust? It's the fourth and probably the most important phase in the property cycle, and it definitely looks like there could be a property bust coming up sometime soon in the New Zealand market. So I'm Andrew Malcolm from Mortgage HQ, and this is part of our property cycle series. Go back and have a look at the previous videos if you haven't already, and then catch back up. So what does a property bust look like? Well, this is when people really start to see the potential and even actual what's happening is property prices starting to fall below where they peaked. So you might have seen properties gone from 800,000, 900,000, 1 mil, and they might go back down to 950 or even 900. So this is when property values fall, and this is what a lot of people have been talking about for 5 or 10 years, saying property prices are going to fall. And this is when it actually happens, and it might actually only last a couple weeks, couple months, or half a year or a year. But this is when, in our peaks and troughs on our linear graph between house values and time, this is when potentially is the best time to buy, because this is when prices are at their lowest and everybody is scared in the market about whether it's going to get worse. So what are some characteristics of a property bust market? This is when businesses are really feeling the pain. The property market and the economy are closely tied in New Zealand. So businesses are feeling like income is slowing down, people are not frequenting their businesses much, upsells and cross sales are not happening, they can't raise their prices, and this can lead to job losses, which can really reinforce and perpetuate a downward economic and property cycle. Now in this property bust stage, rates have probably got a bit higher than they were in that recovery phase. Finance is harder to get, conditions around approval for finance is a lot stricter, and generally speaking the banks are in a point where they're closing shop because they are waiting to see what is happening. And this is where you get nervous buyers and a cycle of fear. Now anyone that has to sell and buy because of their family situations, maybe they're moving cities, their family's growing, or maybe they're entering the market, they're doing it in a timid way, which means that probably see less auctions, more negotiation sales, longer settlements, more conditions, sales that are under contract but don't go through because buyers might get nervous. That cycle of fear means that property buying can get drawn out a lot longer than maybe is the average over the cycle. Now, what we see in a big recovery and rapid growth phase is it's a seller's market. That means property prices go up, there's less supply, and demand is outweighing supply, which means that when you're selling a property in a strong phase, you can kind of pick and choose and you get a good price. The opposite is true in the bust phase. There's less buyers, there might be a lot of people trying to sell their house at the same time, which means you might have to take the price that's on offer. It might not necessarily be the price you're hoping for. And this is where a lot of properties go unsold because people just can't accept that this is the reality of what their property is worth. Maybe 6 months ago it was worth $1 million, and now they have to take 920, and a lot of people can't bear to go through with that sale and lock in the loss. And this is why during the bust phase, smart property investors, they hold on to their properties because they've already prepared much in advance, and they don't want to lock in that loss unless they really have to. Now in New Zealand we don't see as many mortgagee sales, but during this stage, this is when defaults are more likely to happen. Most people don't let their property go to mortgagee. They get in front of it and they sell it before they end up losing it to the bank. Now, media negativity is towards property investing is going to be really negative in the bust phase. You see a lot of panic selling as a result of the media coverage of property investment and property values. You see a lot of economists and property experts talking down the prospects of property or trying to justify why we'll be coming out of this bust sometime soon. But this is when property becomes less attractive and you see a lot of people looking at other investments. Now, property development during a bust phase is going to slow down as it has in the past bust phases. Property developers can't access their funds as readily as they were used to. No, property developers are not looking at a strong market, so they're deciding to wait and see what happens. So the supply side of properties starts to go down. Developers and finance companies, if they're mid development and they can't get the tranche finance or the pre-sales that they need during that phase. This is when you can see developers starting to go bust. We have seen some of this already in New Zealand, even in the last couple of years. You're seeing some wealthy property developers and finance companies going broke or going bust, and they can't continue on their projects and new people have to come in. So what can we do to prepare for a property bust cycle? What you really want to do is check out the next video, because that's where we're going to talk about how to get prepared for taking advantage of the bust cycle and making sure you don't get caught out. So subscribe, ask some questions if you've got specific questions, and check out the next video.